Okay, let's unpack this. Welcome to the deep dive. We're here to sift through all the noise, the latest articles, the research, the chain data, everything happening in crypto right now. Our goal today, basically, to pull out the essential nuggets so you can get genuinely informed on what's really driving the conversation. No jargon overload, just the core insights.
Exactly. There's always so much happening, it's easy to get lost.
Totally. So we've zeroed in on three big things today. First, a potential shift in U.S. regulation that's got people talking. Then, a pretty significant move involving Solana and traditional finance. And finally, something really interesting, maybe even a bit counterintuitive, happening with Bitcoin's supply.
Yeah, three really key areas.
Right. We think digging into these will give you a much clearer picture of the landscape. So let's just jump straight in.
Let's do it.
Okay, first up, this talk of a major U-turn in U.S. crypto regulation. For a long time, it felt like, regulatory uncertainty was the only certainty. Now we're hearing about the SEC and CFTC maybe working together more, potentially pivoting. Is this real? I mean, what's actually happening?
Well, U-turn is a strong way to put it, but something is definitely stirring. The SEC, the Securities and Exchange Commission, they announced a new crypto rulemaking agenda, kicked off September 4th. And this isn't just talk. They're laying out plans for clearer rules on token issuance, token sales, stuff that's been a massive headache for the industry.
Right, the ambiguity there has been a killer.
Exactly. And they're exploring safe harbor provisions. That's potentially huge.
Safe harbor, meaning projects might get some breathing room initially without being immediately labeled securities.
Precisely. It could allow them to operate, develop, build their network before full securities compliance kicks in.
Yeah.
That's a game changer if it happens.
Okay. What else is in this SEC plan?
They're also looking to clarify the rules for broker-dealers handling crypto and investigating ways for crypto assets to trade on proper national exchanges and ATS alternative trading systems.
ATS. Those are the more institutional-focused platforms, right?
Yeah, often used for bigger, quieter trades. So that signals interest in bridging traditional finance with digital assets more formally. But crucially, it's not just the SEC. The CFTC, the Commodity Futures Trading Commission, they're involved too. They're launching joint initiatives with the SEC.
Okay, so they're actually coordinating. On what specifically?
Things like the implications of 24-hour trading, which is standard in crypto but not traditional markets. Also frameworks for DeFi, decentralized finance, and even getting into the weeds on things like cross-category margin management. That's super important for how big institutions handle risk across different types of assets, crypto and traditional. It's been a barrier.
Wow, okay. That sounds comprehensive. Almost too good to be true, maybe, if this all actually comes together.
Well, yeah. That's the big if, isn't it?
Exactly. I mean, the crypto world is famous for regulatory delays, political fights. What's your biggest skepticism here? And what's a realistic timeline before we see, say, big institutional money really flow in because of this clarity?
That's the million-dollar question. My skepticism isn't really about the intent behind the announcement. The potential clarity would absolutely pave the way for more institutional capital. The skepticism is about the execution and the speed. These proposals have to go through hearings, public comment, potential legal challenges, political debates.
Right. That takes time. A lot of time, usually.
A lot of time, especially for something as new and, frankly, disruptive as crypto. So while the market might react positively now, the actual implementation could be much, much slower than people hope.
So a risk that the initial excitement fades if things drag on for years.
Definitely a risk. Sustaining market momentum through a potentially long legislative process is tough.
Okay, but let's assume for a moment these regulations do move forward, even if slowly. What are the more immediate and then maybe midterm impacts we could expect for the market, for investors like you listening?
Well, short term, you'd expect this kind of news to boost sentiment, particularly for tokens that seem well-positioned for compliance or U.S.-listed companies in the space. Think, Coinbase, maybe some mining companies. Midterm, if these barriers genuinely get lowered for institutional funds, that likely means more product approvals. We've seen Bitcoin spot ETFs, right?
Yeah.
This could open the door for more ETPs, exchange-traded products, maybe covering different assets, different strategies. It broadens the regulated investment options beyond just spot Bitcoin. That's significant for diversification.
So for someone trying to stay informed, what should they be watching?
Keep an eye on those assets likely to benefit from clearer rules. Coinbase, the Bitcoin ETFs, maybe Ethereum, given the buzz around a potential ETH spot ETF too, and definitely track the timelines for the actual regulatory hearings and debates. Market volatility often spikes around those dates. Knowing the calendar helps anticipate potential swings.
Good advice. Okay, let's shift gears now, away from DC gridlock potentially, to something that's actually happening.
Well,
Solana. Solana making moves into traditional capital markets. I mean, connecting Solana and NASDAQ wasn't something you heard much a year or two ago. What's the real story here?
It really shows how fast things are changing. So the specific news is a Canadian company called Sol Strategies got approved to list on the NASDAQ. They're expected to start trading September 9th. Ticker is STKE.
Sol Strategies. Okay, so to be clear, this isn't a Solana ETF like the Bitcoin ones.
No, absolutely not. That's a critical distinction. It's not a fund holding Solana directly. It's a strategies company, meaning they build things on or around the Solana ecosystem. They're heavily involved with Solana, but it's the company's stock listing, not SOL, the token itself.
Got it. But still significant for Solana's visibility.
Oh, hugely significant. It puts Solana squarely in the view of traditional finance, of NASDAQ investors. It starts positioning it perhaps as the next narrative after Bitcoin and Ethereum in terms of stock market exposure.
Yep.
And for certain institutional funds, maybe ones that can't easily hold crypto directly, this offers an indirect way to get some exposure to the Solana ecosystem via a regular stock. It's another crack in the wall between crypto and TradFi.
Makes sense. But whenever something like this lists, especially tied to a, well, let's face it, volatile asset like Solana, are we looking at a classic buy the rumor, sell the news situation around September 9th?
That's definitely the textbook scenario to watch for, yes. You'd expect volatility around the actual listing date as traders react. That buy the rumor, sell the news dynamic is very common.
Are there any cases where these kinds of listings don't follow that pattern? Or is it pretty standard?
It's fairly standard, especially for something generating this much buzz beforehand. The initial excitement often peaks around the event itself, then settles. The real game changer for Solana, the thing that would be a more fundamental long-term catalyst, would be if a dedicated Solana ETF eventually gets submitted and seriously considered by regulators. That's a different ballgame.
Right, that would be much bigger.
Much bigger. And we should also remember, Solana's history. It's had its challenges, network outages, stability questions over the past year or so. Investors need to factor that risk in too.
True. It definitely highlights that increasing overlap, that blurring line between crypto and traditional finance. Fascinating stuff.
It is.
Okay, let's move to our final topic. This one goes right to the core, to Bitcoin's fundamentals. And honestly, this data point might really make you rethink the market's direction. We're seeing some surprising things happening with Bitcoin supply. Can you walk us through this illiquid supply metric? Why is it hitting all-time highs?
Yeah, this is really compelling data coming from Glassnode, reported by CoinDesk recently. Bitcoin's illiquid supply, basically. Coins held in wallets that show very little history of spending has gone over 14.3 million BTC.
14.3 million out of what, around 19 point something million total?
Exactly. It works out to roughly 72% of all Bitcoin ever issued. 72%. And what's really striking is the trend. Even though Bitcoin's price pulled back, about 15% from its high in August, around 124K, long-term holders are still accumulating. They haven't stopped buying.
So conviction remains incredibly strong among those holders, despite the dip.
Incredibly strong, almost like they're ignoring the short-term noise. Now, there was an interesting blip last week.
Oh.
Long-term holders, LTHs, they collectively sold about 97,000 Bitcoin in a single day. That's the biggest one-day outflow from LTHs this entire year.
97,000. Okay, so some big players decided to take profits or rebalance.
That's the likely interpretation, yes. But, and this is key, even with that single large sell-off event, the overall trend of accumulation by this group continued. The demand seems to be absorbing these pockets of selling.
That is fascinating. So you have this ongoing accumulation, this tightening supply from long-term holders. Yeah. And then you mentioned strong ETF inflows recently too, right? Over $280 million in one day.
Yeah, the ETF demand has been robust.
So what's the maybe less obvious conclusion here? The intuitive one is just bullish, but is there a deeper insight, especially with the ETFs now in the mix compared to past cycles?
That's a great point. The counterintuitive bit might be how stable this makes the floor. Yes, LTH accumulation looks like past bull markets like 2016, 2020. But the ETFs add this new layer of almost passive institutional buying. It's consistent, potentially less sensitive to short-term FUD or price swings than individual retail or even some traditional LTHs.
So a new kind of dealer dynamic driven by the ETF structure itself.
Kind of, yeah. It suggests a potentially higher, more resilient price floor than we might have seen in previous cycles, simply because there's this steady, almost algorithmic institutional demand soaking up supply alongside the traditional long-term holders.
Okay, so why does this matter so much? What's the implication?
Well, fundamentally, the tighter the supply, the less Bitcoin is available to be sold on exchanges. Basic supply and demand, right? It reduces potential selling pressure and helps establish higher lows over time. It reinforces that buy the dip mentality, especially when you see ETFs passively accumulating regardless of minor dips. Structurally, as I said, it mirrors those mid-bull phases of 2016 and 2020 quite strongly.
But there are still risks, right? Like that a big LTH sell-off you mentioned.
Absolutely. Short-term risks are always there. A few large holders deciding to sell or, some negative macro news, a strong move in the US dollar, those things can still cause significant short-term drops. Volatility isn't gone.
So if you're trying to navigate this, how do you use this illiquid supply data? What's the actionable insight for midterm or short-term strategy?
For a midterm view, this data supports the idea of accumulating strategically, building positions in phases, perhaps buying significant dips, maybe using options or keeping leverage low to manage the risk of those sudden drops.
And short-term, what levels are key?
Short-term, you'd be watching support levels very closely. Right now, that seems to be around the $107,000 to $112,000 zone.
Okay.
If that breaks, the next major level people will watch is probably the psychological $100,000 mark. If it holds and stabilizes, continued ETF inflows could certainly fuel the next leg up.
And what specific indicators tie into this?
You'd want to watch the illiquid supply chart itself, obviously. Keep an eye on LTH spending patterns or those big sell-offs, isolated events are becoming a trend. Also, exchange balances, daily ETF flow numbers, and always the macro calendar inflation data, Fed meetings, things affecting the dollar.
Got it. Okay, so let's try and pull all three of these threads together. We've got the U.S. regulatory moves, Solana's NASDAQ moment, and this Bitcoin supply squeeze. What's the big picture these paint when you look at them collectively? What's the overarching story right now?
Well, if you step back, they tell a story of, I think, a market that's maturing, but still incredibly dynamic. It's evolving. The regulation piece points towards eventually clearer pathways for institutional money. But you need patience, right? It's a long game. The Solana listing, it's more short-term, maybe speculative, but it clearly shows traditional finance wants exposure, even indirectly. The real story there would be a proper Solana ETF down the line.
Right.
And the Bitcoin supply data. That's a strong midterm bullish signal. Supply tightening, strong holder conviction, new ETF demand, but still vulnerable to short-term shocks.
Right.
So you put it together, it's like traditional finance is increasingly engaging, the core assets fundamentals look strong long-term, but the path forward isn't going to be perfectly smooth. And it raises this bigger question, doesn't it? How far does this integration go? How much does crypto become just another asset class versus retaining its, decentralized roots?
That really is the core tension, isn't it? That integration versus the original ethos. And it makes you wonder, given these moves, how is that definition of a traditional asset going to keep changing? What other digital assets might make these kinds of leaps into the mainstream next? Definitely something for you, the listener, to think about.
Food for thought.
Absolutely. Well, that brings us to the end of this deep dive. Hopefully that gives you a clear view of some key forces shaping the crypto market right now. Thanks for joining us. Until next time, keep exploring, keep learning, and stay well informed.